Hello and welcome everyone to another weekly market commentary from StashAway. With us, of course, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hello, everyone. It's good to be back here again. Philipp, good to see you.
Yeah, good to see you as well. Hey, we got so many questions today. Freddy and myself thought actually, hey, to make it a little bit more interactive, we try to get to as many as possible, especially with, the markets not having too much new news since our last video, right? I think we're still seeing like the market, melting up, so to speak, on coronavirus vaccine advancements, right? First vaccine being given to a person in the UK a couple of days ago. So I think, with that being said, Freddy, let's go to the questions because we do want to address as many as possible. We do want to still keep the video and the podcast quite concise. So let's go with a question that was asked by Bradley Ford, and I will, for Sean Lim, just for you that we're kind of packaging the two of you together because you kind of have roughly the same question. But Freddy, Bradley Ford says, can you discuss the future of the US dollar, in particular the impact the dropping US dollar will have on our StashAway investments, and maybe should the ETFs move to those that are not US dollar based?
First thing, you may see that a lot of the ETFs are denominated in USD and they're listed in the US exchanges, but it doesn't mean that they are exposed to US dollars. In fact, in our last reoptimization in mid-May this year, we have explicitly reduced a US dollar exposure for most portfolios close to zero. And for some portfolio, there's still some residual exposure that's very small. So for example, if you buy Asia ex Japan is listed in the US, quoted in US dollar, but the dollar yuan will actually drive the yuan will actually drive the value of the ETFs. And if the US dollar is not moving, the Chinese stocks, the underlying Chinese stocks, which is 40% of that, would also drive the value of the ETFs. So it's actually just for quotation purposes and for liquidity reason we are there. We'd like to just clarify that actually as a firm, because of the fact that in the last reoptimization, we ramp up gold, which is a short dollar exposure. We ramp up international bonds and other, even like Chinese tech rather than US tech. We have actually brought US dollar exposures to a minimum.
Yeah, no, thanks, Freddy. And I think, this goes, it's a great information on our portfolio for people, that have not listened to us that often. So Sean had the same question, but then he had a follow-up question that we wanted to address, right? And he's saying StashAway's USD portfolio has been a drag due to currency movement. How have the relative performance been for its GBP and USD portfolio over the last 12 months? And does the team expect the portfolio to still closely mirror each other given the vast differences in geographical exposure?
Well, firstly, like I said in the answer in the first part, they are actually not exposed to pound or US dollars. They're just quoted in it. Then some of the portfolio may have a little bit of exposure, but the key for our algorithm is to take into account the implied currency exposure, manage it, make sure it's very diversified. And in fact, with all the money printing, we have consciously made an effort to make sure we stay away from too much US dollar exposure. Now, in terms of difference between the Malaysia DRB portfolio versus a global portfolio, they are fundamentally different because the Malaysian version, this version of it, is to help our user comply with their domestic ringgit requirements. It's also to help the Islamic community, get access to a 50% Sharia compliance investment universe. And it's actually quite exciting, and it's you can call that a bit of a related to ESG in the same spirit, in the sense that we are actually trying to empower users, giving them access to invest while keeping in mind their personal goals or beliefs, right? So they are fundamentally different, but both of them are not exposed to US dollar or pound only.
Yeah. No, great explanation there. Let's move on then from the US dollar questions and move over to the question asked by Alex. He's saying, "Hey, StashAway team, I would like to ask why you are triple dipping into the same top China companies in the 36% risk portfolio, which with companies like Alibaba, Tencent, Taiwan Semi being present in the SPEM, KWEB, as well as the AXJ ETFs, and collectively taking up a hefty part of each of the ETFs. Was this intended or due to some other reasoning?"
Well, you can't. It's a multi-dimensional thing when you construct a portfolio. You don't actually dip into each and really think this way. You sort of the correlation metrics would take care of it, right? If you have a lot of common names, a lot of double counting or whatever, all the ETFs would be highly correlated. The algorithm by design, because of its use of the correlation metrics before it optimizes portfolio, it would take that into account, right? However, I have a table here just to be a lot more clear on this point. Here I have a table where I've highlighted in blue cells and white fonts the specific ETF weights in this particular portfolio that Alex has mentioned. So SPEM is emerging markets equities. It has 7% in SR36. And QUAPE is Clean Shares China Innovations ETF, and we have a big one, it's 20%. And Asia ex Japan is a super diversified ETF, and we had around 6% of the portfolio in it. So these three together collectively represent 33% of the portfolio, right? Now, if you look at Alibaba, for example, its share in SPEM is nearly 6%. It has an 8.5% share in QUAPE and 7.4 percentage point in AXJ. So Alex is exactly right. It seems like you're triple dipping, and that's sort of like, wow, there's common names are showing up, right? However, if you actually work the math up, right, multiplying the blue cells with the white cells and to get to the portfolio level, Alibaba, yes, does have a larger than usual sort of a single security weights in the portfolio, but it's still only about 2.6% of the portfolio. It's actually very tiny. But Alibaba is due to its sheer size, right? And Tencent, they're such a important part of the Chinese ecosystems. Their market value is that big, but yet when you add them together, we are talking about 5.8 percentage point of the portfolio in the tech leaders of China. So that's not a lot, actually.
Yeah. No, thanks for sharing that overview, Freddy. It was actually quite interesting, even for myself, to take a look at. So yeah, great explanation there, and obviously, hopefully, this answers your question, Alex. So Freddy, we do have a few more, but I think maybe we'll take one more question here, right? Another question maybe kind of builds up on the question we had before, right? Is from David Chang. What are your thoughts on US Congress passing a bill that could delist Chinese stocks from the US market? How would it affect the risk of having Chinese ETFs in the portfolio? It seems like a remote possibility now, but maybe it's materializing. So kind of plays into that role.
Yeah, it's a great question, and I'm going to assume, let's say it happens today, right? I'm going to actually, let me do an exercise. Let's say it happens tomorrow. And however, it's often misunderstood, and you look at the headlines in the media, it doesn't tell you a lot. There's a process for it. So what it means is the Congress will pass a bill that requires Chinese companies listed in the US exchanges to sort of declare that they are not under any foreign government interference or influence. And also that they will agree to regular audits, like this quarterly or semi-annually audits, where the government will send someone in. Details are still very loose, but they will send auditors in to audit the firms. And if they found that there's accounting irregularities or activities that's suspicious and it's not addressed for a period of 3 years from the first flag, then the companies would be delisted from the US exchanges. So we are really talking about a pretty lengthy process, even if it happens. And also the companies do have avenues to not fight back, but sort of respond, right? They can, they'll be issued corrective notices, and then they will, through proper audited standards rather than Trump standard, and Trump is out. So proper standards demonstrating that they're complying, that will be resolved, right? You have a window of 3 years. So I don't know why we are so worried about this headline rather than going to the details. So I'm actually not concerned about it.
Yeah, no, and I think we discussed this as well before. I think on a couple prior weekly market comments as well. So thank you, Freddy, and thank you everyone for sending in so many questions. So if we didn't get to yours, we'll probably try to get to it next week. Otherwise, for everyone new watching or you have follow-up questions, feel free to put them in the comment section below, as well as sending us a message to support@stashaway.com as well. We'll definitely pick those up. And with that being said, before we let you all go, there's a couple more webinars coming up, and one that's probably very exciting. If you like the market commentary, you will definitely like the event we have next week. So for all our Singapore listeners, we have a webinar called StashAway Market Outlook 2021. I assume, Freddy, that's going to be you.
Yes.
So that's on the 16th of December. 7 to 8:30 p.m. So if you want to sign up for that, links are in the show notes below, as well as on our website. And for our Malaysian audience, we have a webinar called An Inside Look into StashAway, also on the 16th of December, 6 to 7 p.m. Links, again, as always, in the show notes below. If you want to learn more about personal finances or entrepreneurship, you may also take a look or listen to our podcast, which is called In Your Best Interest. Again, there will be links in the show notes below. Otherwise, Freddy and myself will be back with you next week, and looking forward to more questions and more engagement from the audience. So thank you so much again, and have a wonderful rest of your week. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.